traders, Gary Wagner here. Just about 11 o'clock in Honolulu, 4 o'clock in New York on Thursday, 14th day of November, 2013. And this is the daily report for gold and silver. We have moderately higher pricing across the board in the precious metals markets. In terms of percentage gain, we've got platinum leading the way. It's up about $20, $14.51. Let's talk about gold. Gold is showing some nice resiliency, up just over $5 on the day. We're looking at a 60-minute chart. Current print on the screen is roughly 1287 and change. The high today has been 1295, this being a 60-minute chart. That's our high right here. Our low on the day has been 1277.50. We can see that the day starts right here, and the low was made shortly after, within 4 hours of the actual change of date, so to speak. So our low, our high, we're currently trading, as I said, at around 1287, puts it around mid-range for the day, but it does put it up about, as I said, $5 on the day. Silver also showing a nice gain. That's actually up almost a full percent, 0.85 higher on the day, 17 cents. Current print 20.77. The low is 57. We can see that down here in terms of the range. And in terms of the high is right at 21. That's Kitco's high as it shows it on the website. First chart that I want to look at on today's show is a 60-minute chart. It is compressed so we can get some time in there. We're going to start really at the end of October here. 60 minutes in duration, Japanese average format in terms of the chart style itself. Now, when we look at this chart, what we're looking at, and I want to try to go into somewhat of the subcount today on our Elliott wave, and this is how we're going to set this up. But when we look at the top that we hit, the most recent top, that was 1360 on the last rally. And from there, we pretty much had a fall from grace, so to speak. We watched the market go from about 1360. We hit these lows just around 1300. Let's go ahead and kind of put that benchmark in. I'll try to line it up as straight as I can there. So it's hovering what? Here's 1310. So it's hovering just in the 13 teens for a while. It dips at one point just below 13, but kind of maintains and kind of trades flat for the better part of the beginning of the month, the 11th, the 4th, the 5th, the 6th, the 7th. Then we see the market actually dip. We get our first real sell-off. This sell-off right here, as you can see, in terms of Japanese average charts, we get a pretty solid set of candles moving straight down, long body size, lack of wick. And once it does that, it looks as though it's going to be trading sideways, but in fact is drifting lower off of this base. Now, it finds its low at 1260, so we've got 1360 to 1260 that we want to actually look at. This is going to be one particular wave in terms of our subcount. Market begins to move up from there. 1260, we looked at that all-time low, not all-time low, but the 1250 low that we hit, which was the most recent low since 1181. And then the market comes up to the intraday high that we have seen today, and that's just above 1290. We haven't really hit 13, and then backs off just slightly, and it's currently trading 1287. So the reason for setting up today's show by looking at the 60-minute, that very, very short-term chart, is so that we could then gain some perspective. We're looking at our daily chart. On this daily chart, it has been our assumption that we have really been in a 5-count wave down scenario in gold, a bear count. And when we look at the bear count, this was the extension or the conclusion of our long wave 3. We then get our wave 4, and it's my belief that we're currently in wave 5. Of course, 4 we could break up in terms of an A, B, and a C. And what we look to do in terms of wave 5, in terms of the count itself, is going to be a 5 count. So we believe that we've concluded one. This move from, call it 1250 up to 1335 plus, that was wave 2. Wave 2 of 5, and we are probably currently in wave 3 out of 5. Now here's the thing about 3, we are getting a little bounce up, and I kind of expected that. However, if this is to follow straight Elliott wave tenets, then wave 3 cannot be the shortest of any of the impulse waves. Now, that being said, all I have just done is I have created a scalable line which covers the length and the move down that we saw in our wave 1. If we take that and we go and extend that over to the top of wave 2 and call this that third wave down, there is the opportunity that we could see not only a new low on the next real dip in the market, but we could actually see it go and match this current, not all-time low, but really the all-time low since we hit the all-time high, the most recent low of 1180. And that would create really a flat, because from there we would still have wave 4 and then a fifth wave. Now, it can unfold where there's only 3 waves, but typically you will get an ABC, 1, 2, 3, 4, and 5. So right now, the question is, where are we going to see this current rise in the market? And of course, we're talking about this particular area here. And so there's probably a subcount within this wave 3 that will either unfold as a 3 or a 5 count. And to get a real handle on that, what we want to do is a simple Elliott wave retracement, just looking at this wave and then looking at 50% and 75%, because that's the area we could see the market move back up before falling back down. Let's go ahead and add that. So what I have done is I have simply gone ahead and added a fib extension, a fib retracement, and the fib retracement is really accounting for this latest correction in which we saw the market drop from about 1360 to this low right here of about 1260. About 1260, I believe, was the intraday low. We're setting it at 1259. And when we do that, if we were to see this counter wave move 50%, it would move above 1300. If we were to see it move into the 75% category, and 75%, we're simply talking about that the move back up is 75% of this corrective wave down. That would take you all the way up to 1336. What's interesting is that 1336, as you can see, is a fib harmonics right here, because we have 1336 coming in, I believe, as the 38% retracement. Here's 23 at 72, and this is going to be 36. So you get a fib harmonics. You're going to have definitive, and we know that there's real resistance in that area, but definitive resistance roughly at around 1336. The key is, can it actually first make it over 1300? Because although that's not a Fibonacci retracement number, we know that 1306s. Here we've got 1310 as a 50% of this move. So we know that once, or if and when, the actual price range can actually get above 1300, these are the points where it's probably going to run into some real resistance. And the last thing before we move on to another chart that I do want to point out and really look at is our MACD. I'm going to kind of enlarge that for us. And we, have seen these two lines cross right here and right here. Market has been heading lower, no doubt about that, but you're also getting the MACD, which is convergence, divergence. Are they coming together or moving apart? You can see that they are really widening on each side, so that even with this bounce up, how far it will go is something that we'll have to see. Now, you can get a scenario, obviously, where it kind of switches. You get a cross, and it's really a false cross. And so we could be getting something like that, where really what we see in the market is we've got this divergence. They're moving apart, but then they'll come back together kind of like this and then cross like this. If we get any kind of traction on this current little bounce to the upside. And the last chart that I want to look at in gold for today's show is this 3-day chart. What I want to draw our attention to, of course, we have our long-standing resistance line. And you can see that comes down here. We also have a fib retracement that really accounts for this last rally. 1274, important number, market's trading at 87, so it's well above that. You've got this small, this is a 3-day chart, you've got this small bodied candle forming, and if it was to be followed in the same way that we saw this variation of a three-river morning star, meaning over the next 3 days we have this market move up, it would actually need to move over this 1300 to give us that long green candle. But if we saw that, you would really have the makings of another three-river morning star variation. That in and of itself could signal higher prices, but as I've said on the last couple of shows, to me, the real issue that we need to see in terms of going from a bull count to a bear count, or being overall bearish in the market to becoming bullish, because realize that at any moment the change from bull to bear can happen. It's a very, very subtle change, so these are the things that we'd want to look for, but we would have to see it cross above this long-standing resistance line. It was unable to do it on this attempt. It was unable to do it on this major attempt of the last really sizable rally that we saw. Now, although we have higher pricing on the day in silver, as you can see on this weekly chart, no doubt we are still having a down week in silver. We have identified different areas of support and resistance. Markets trading at 2077. 2068 is that level that we really want to see it maintain above, because that is a retracement of, in terms of the percentage, a 61% retracement of this particular move here. 61% retracement takes us to 2068. So if it can close effectively and begin to trade effectively above 2068, that also tells us that we could be seeing a little bounce ahead in silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Friday for the weekly wrap-up and review. Bye-bye.